Today I'm going to show you the fundamental analysis of UltraTech Cement Limited. So this is the one of the biggest company in India, and it is Aditya Birla Group company. You can see this company is having biggest and largest manufacturing capacity for the cement product, and it's supplying a lot of cement in the different side of the country. Okay, very good company. So let's and this is the one of the large cap company. We will see a more fundamental in the UltraTech Cement is engaged in the manufacturing sales of cement and cement product in India. So right now the market cap of this company is 1,84,000 crore and current price is 6,390. High price is 8,269 and low price is 5,157. The stock P is very genuine as per the market cap and kind of what kind of volume and product the company is having. This P is basically reasonable P for this company. The book value is 1747 and dividend yield 0.59. Return on capital employed 14, return on equity 15. Okay, and you can see face value is 10. Still company is having face value 10 and PEG ratio 1.17. The PEG ratio is very genuine. So maybe the company's price may move forward in the upcoming days. Equity capital just 289, which is if you talk about the overall market cap, this equity capital is considered as a good capital. Current ratio is 0.62, and maybe the current asset and current liability is having this kind of 0.62 kind of ratio, which is called as a very maybe good and genuine. Price to book value is 3.467, growth factor 4 and Piotrowski is 7. Market investment is 784 crore and return on asset for 5 years is 6.16%. Debt to profit is 1.54. It means company is paying their particular debt as per very fast. And ultimate score is 5.35. Greater than 3 is called as company having some debt maybe but paying on time. So it's as particularly you can say ultimate score is 5.35. Difference is IB 1,88,4,000. So company's intrinsic values current price is very higher than intrinsic value. Number of shares 28.9 and 10-year back 27.1. So overall solid check is 1.05, which is called as a very good and flat. EPS for latest quarter is 54, but EPS for the whole year is 250. Sales growth for the 10 years is 11%. Sales growth for profit growth for the 10 years 12.5. So you can see the overall chart of this company. Company is given a multi-bagger return, but you have to keep for the long term for maybe 10 years or 5 years. If you see anything in the short term, you will not see that. Again, company has reduced debt and company has delivered a profit of 21.9 CAGR. Stock is trading at 3.63 times its book value and tax rate seems low. The company is having the same business like ACC, JK Cement, Sri Cement. Okay, sales. So if you see that company sales are growing exponentially. Okay, in June 2019, the overall sales for the year was 11,000 crore. Now it's 15,000 crore. Now sales are growing. Apart from that, the company is having creating the profit. Operating profit is 2,949. Now it's 3,095 crore. Operating margin was 26%. Now it's 20%. This is the one challenge for the all cement sector companies. The margin is very challenging because the raw material costs are increasing. Other income is also basically company creating some other income. Interest, company is paying some interest of 216 crore. If you see consider the full profit. So, but interest company is paying genuine interest, no problem at all. Profit is 1893, but now it's profit 2293. Net profit is also growing. If you say 1281, and now it's showing 1582. So profit are also increasing year on year, but something flat since 2019, but not that much. One of the positive sign for the sales here is that if you see that overall sales of this company, you can see the sales is growing from 92%. Now it's 50. So earlier in 2011, 13,000 crore in for full year sales. Now it is expecting 52,000 crore. So as soon as India is growing, population growing, construction going, the particular UltraTech Cement is also increasing the overall volume. Company's profit is also increased from 3,000 crore to 11,000 crore yearly. The operating profit margin is 20%. Now still 20%. There's no very big changes in the margin at all. Company is paying some interest of 800 crore annually. Okay, profit before tax also increased last 10 years 745, exponential growing to 9,000 around. Excellent company. And net profit is also 1361. Now it's saying 7,216 net profit expectation for this year. excellent company, dividend company, paying dividend consistently. If you talk about compounded profit growth, 22%, 5 years CAGR 9%, and return on equity is 13% in last 5 years. One of the good sign of this company is not diluting too much equity capital. It's just 274 equity, now 289, as I discussed and told you. But one of the positives, and company's reserves are growing exponentially. At 10,000 reserve, now showing 50,000 crore reserve. What a company. Borrowing, see, borrowing is also there. There's no issue, no doubt, because cement companies creating lot of capital and creating lot of basically equipment for the cement production, and need some big area and big space, so they are investing and taking lot of loans from the bank, but they are paying out very quickly. If you talk about the investment company, having some investment of 6,000 crore, and if you talk about the other asset company, inventory is 5,500, and trade receivable 3,000, cash is 359, loan and advance 3,800, and other that is 3,412. Okay, cash is 359, so that is also good sign for the company. Overall assets are increasing year on year, very good. Company is solid fundamental. Debtor days also you can say flat, inventory days also flat, days payable also flat, cash conversion slightly but working capital also flat. Excellently, you can say the company return on capital employed is 14%. Promoter holding intact here. There is slightly reduction, is 59.96 is the promoter holding. FII 13%, DI 18%. Government is also holding the stock, and public holding 8.69. The very good cement company. Always check with advisor before buying this stock.